Welcome back to Investing Talk Podcast. We're so glad you've joined us for another deep dive. Today, we're tackling a question that's likely on many investors' minds, maybe even yours. Is Intel Corporation a good time to buy now? For decades, Intel inside was, well, it was everywhere, wasn't it? Almost a guarantee of dominance. But the whole silicon landscape, it shifted dramatically. So this isn't just about a stock symbol today. It's about understanding this really intricate dance of technology, intense competition, some pretty substantial government support, and these audacious strategic pivots that define Intel today. We spent a lot of time sifting through reports, analyses, trying to distill it all down, give you the clearest picture possible, really cut through the noise, get to what truly matters. Before we unpack all that, if you find value in these discussions, please take a moment to subscribe, like, and maybe drop a comment on this deep dive. Your support, it really helps us bring more insights like this directly to you. And if you're feeling extra generous, hey, consider buying us a coffee. The link's usually somewhere nearby. Okay, let's get started. Okay, let's unpack this. Intel, once the undisputed king, right? But now,
Yeah.
the investment landscape seems incredibly complex. What's the overall story, just sort of high level when we first look at it?
It is complex. The situation with Intel is quite paradoxical, really. It's this challenging investment opportunity. You've got significant operational hurdles, incredibly intense competition, and yet at the same time, there's this substantial government backing that could fundamentally alter its trajectory. Right now, the stock's trading around, what, $22.20, which looks like a deeply discounted valuation compared to its history, compared to fair value estimates. But, and this is the key thing, that discount isn't there for no reason. It reflects serious market skepticism about Intel's ability to execute. Can they actually pull off this turnaround? That's the question baked into the price.
Right. And when we look at the financials, I mean, it really highlights a company in deep transition. The numbers, they tell a pretty stark story, don't they? We're seeing that significant revenue decline, $63.1 billion in 2022, down to $53.1 billion in 24. And then there's that staggering net loss, $18.8 billion in 2024. What's truly driving those challenging figures? What's underneath all of that?
Well, that really brings the focus onto profitability and cash flow, doesn't it? That huge net loss you mentioned, it wasn't just a blip. It was primarily driven by substantial restructuring charges as they try to reorient themselves. Significant asset impairments, too, basically writing down the value of some parts of the business. And maybe most importantly, colossal losses coming specifically from their new foundry business.
The founder, right? The big bet.
Exactly. To give you a sense of the scale, their gross margin of profit on each chip before other costs that compressed down to just 32.7% in 2024. That's a dramatic fall from their historical highs. And the Intel Foundry segment, on its own, posted an $8.1 billion operating loss.
Wow. $8.1 billion.
Just from that segment.
Hey.
And on the cash flow side, while operating cash flow can sometimes look okay, their free cash flow has been consistently negative. They reported negative $4.4 billion in just Q1 of 2025.
And burning cash.
Burning cash. It means they're spending more than they're bringing in from core operations, which, isn't sustainable long-term without financing or a very rapid turnaround. And this negative cash flow, it's fueled by massive capital expenditures. They spent $5.2 billion in Q1 25 alone.
Just pouring money into factories.
Pouring billions into building these new fabs. Yeah, it's an incredibly ambitious expansion.
Okay, that's a clear picture of the internal pressures. Huge spending, losses in the new venture. Now, shifting focus outside the company, the battlefield, the competition, it sounds intense. Who are the main adversaries here, and how does Intel really stack up right now?
Yeah, the external picture is just as challenging, maybe more so. The key takeaway, I think, is that Intel isn't the undisputed champ anymore. Far from it. They're playing catch-up in markets they used to own, and the cost of just trying to regain relevance is immense. So they face intensified competition pretty much across all major segments. In the data center market, which is vital, AMD has made really significant inroads.
With Ryzen and EPYC.
It's exactly. Gaining market share steadily with those competitive processors. They often offer better performance per watt, challenging Intel's long-held lead there. Then you look at AI accelerators, this booming market. NVIDIA is just dominant.
Completely dominant.
Commanding, what, an estimated 80% market share? With their GPUs, their CEDA software ecosystem. It's a very strong position. Intel has its Gaudi 3 chips, but honestly, they haven't gained significant market traction yet against NVIDIA's lead. It's a tough fight.
And the manufacturing lead they used to have?
That's perhaps the biggest shift. Beyond specific products, Intel has lost its process technology leadership. For decades, they made the most advanced chips, period. Now, TSMC, the Taiwanese company, is the leader, and they produce chips for many of Intel's biggest competitors.
Including AMD, Apple, NVIDIA.
Right, so Intel is fighting rivals who are actually using more advanced manufacturing techniques, often from TSMC. That fundamentally changes the game.
And the market cap reflects this stark reality, doesn't it? I mean, you look at Intel valued around $96.8 billion. And then NVIDIA at, what, $3.66 trillion?
Yeah.
And AMD at $210 billion. It's not just a gap, it's a chasm.
It really illustrates just how much ground the market thinks Intel needs to cover. It's a perception of future potential, or lack thereof, baked into those numbers.
Okay, so you've painted this challenging picture. Financial strain, formidable rivals, lost leadership. Yet, our sources suggest Intel appears significantly undervalued. Now, that sounds attractive, right? But given everything you just laid out, is that discount just the market saying no confidence? Or is there a genuine overlooked asset here? What does that mean for an investor, practically?
It's a really curious situation because on paper, yeah, the numbers do tell a compelling story of potential undervaluation. Based on multiple metrics, Intel does seem to be trading at a steep discount. For instance, a discounted cash flow analysis looking at future cash flows estimates Intel's fair value around $42.08 share.
Compared to $22.20 now.
Exactly. That suggests nearly a 48% discount to what the model says is its intrinsic value. But like you said, this discount largely reflects that profound market skepticism. Doubts about the turnaround, doubts about execution based on past struggles. Investors are essentially demanding proof. Show me.
Right.
And other metrics, like price to sales at 1.7x versus an industry average maybe closer to 3.6x, price to book at 1.98x, they also point towards potential undervaluation relative to peers.
So a significant potential upside if things turn around. But okay, beyond those fundamentals, what about the technicals, the charts? What do they tell us about the stock's recent moves and, importantly, its volatility?
Well, Intel stock has definitely been a wild ride. Significant volatility over the past year. The 52-week range is huge, $17.67 at up to $50.30.
Wow, that's quite a swing.
It is. That kind of movement can be, well, both exhilarating and terrifying for investors. Currently, the stock is trading above its key moving averages, the 20-day, 50-day, 200-day. They're around $20, cent to 73 cents, $20.64, $21.67 respectively. So that pattern does indicate some short-term bullish momentum. The recent trend has been upwards. And technical indicators like the RSI, the Relative Strength Index, it's at 62.11. That suggests sort of neutral momentum. It's not overbought, so there's potentially room for it to climb further before hitting resistance. The MBD, another momentum indicator, is also positive.
Yeah, it's volatile.
Very volatile. That's shown by its high beta coefficient of 1.67. What that means basically is if the overall market moved 1%, Intel stock might move 1.67% in the same direction. It amplifies market moves, both up and down.
So bigger swings.
Bigger potential gains, bigger potential losses. So while there are some signs of short-term strength, that inherent volatility is a huge factor to keep in mind.
Okay, so we've mapped out the battlefield, the financials, the potential value, the volatility. Now, strategy. If Intel really wants to capitalize on any potential upside and overcome these huge challenges, what are they actually doing? We heard about new leadership, government support.
Right, that's the critical question, isn't it? How do they bridge this gap? How do they pivot? Well, first, new leadership. Lip-Bu took over as CEO in March 2025. His emphasis is very clearly on execution over vision.
Less talk, more action.
Pretty much. A sharp focus on operational efficiency, cutting costs, and developing customer-centric products that people actually want to buy. That's a shift. And crucially, that government backing through the U.S. CGSPS Act, this is significant.
How significant?
Well, it's not just a handout, it's strategic. The U.S. wants to onshore semiconductor manufacturing. Intel has committed to receive $7.86 billion in direct funding. And $2.2 billion of that was already received as of early 2025.
Okay.
And that money directly supports their huge manufacturing expansion in Arizona and Mexico, Ohio, Oregon. It effectively subsidizes those massive capital expenditures we talked about. They also made a big move selling a majority stake, 51%, in their Altera business. That's their programmable chip unit. Sold it for an $8.75 billion enterprise value, bringing in about $4.4 billion in net cash. That helps simplify things, focuses capital on the core strategy.
And the core strategy.
The foundry business. That's the absolute core of their future plan. This ambitious idea to not just make their own chips, but to open their factories to make chips for other companies.
Competing directly with TSMC.
Exactly. And their 18A process node, that's their next-gen tech, is now entering what's called risk production.
Meaning?
Meaning they're testing and refining the manufacturing process. It's Intel's attempt to leapfrog back to the cutting edge, make those tiny, powerful chips. Brisk production is iterating, ensuring quality, yield, before full commercial output. It's a high-stakes engineering challenge. Their future kind of depends on it.
Those are definitely significant moves, a clear push. So what are the key upcoming catalysts? What should investors be watching closely to see if these strategies are actually working?
Okay, we can break it down into short-term and long-term things to watch. In the next, say, 3 to 12 months, key events would include the Q2 2025 earnings report that's coming up in July.
Critical check-in.
Absolutely. Critical for seeing early progress under the new CEO, getting a clearer picture of the foundry ramp-up. We'll also be watching milestones with that 18A process node. How's production ramping? And crucially, are they winning major customers?
Like who?
Well, if Intel could sign on big names like NVIDIA, Qualcomm, maybe even Apple for their foundry, that would be huge. It would significantly impact sentiment, validate the whole strategy. Also, watching the market traction of their AI products like Gaudi 3. How's it actually competing against NVIDIA? That'll be important.
But in longer term, say 1 to 3 years out.
Longer term success really hinges on the overall viability and, importantly, profitability of that foundry business. This is a massive undertaking. Can they truly recover leading-edge manufacturing capabilities? Can they win back meaningful market share in AI? And how effectively do they use that CHEIPS Act money? Those are the big questions that will define Intel's fate.
So, bringing it all together, what does this mean for someone actually considering putting money into Intel? With all these moves, these catalysts, what are still the biggest risks? It sounds like a tough road.
It is a tough road, and the risks are substantial. They really warrant a cautious approach. On the company-specific side, you have Intel's documented history of, well, execution failures, delayed products, manufacturing struggles. That's eroded investor confidence over time. Their capital intensity is just massive. Think of it like constantly building these incredibly expensive state-of-the-art factories. The cost is astronomical and it never stops.
Draining cash.
Right. It puts immense strain on cash flow and the balance sheet. Then there's the ongoing market share erosion in core areas like data centers. And the timeline for the foundry business to actually become profitable is really unclear. That's a huge gamble. Then you have broader factors. The whole semiconductor industry is prone to boom-bust cycles. Global demand fluctuates. And trade policy uncertainty, especially U.S.-China tensions, that could impact supply chains, market access. It's a risk. And finally, back to that high volatility, the beta of 1.67. It just means there's substantial downside risk, especially if they miss execution milestones or their competitive position gets worse. It's a very sensitive stock.
Okay. Given all of that, the good, the bad, the ugly, taking that balanced view, if we had to put a number on it, an overall rating out of 10 for Intel right now, what would it be? And what's the bottom line for someone asking, is it a good time to buy?
Well, weighing everything, our assessment gives Intel Corporation an overall rating of 5 out of 10. Right down the
5 out of 10. Okay.
Yeah. The entire investment case really hinges on them successfully executing that incredibly ambitious foundry strategy and somehow returning to technological leadership. The positives, you've got that significant valuation discount, potentially. You've got substantial government backing with the CHEIPS Act that's a real safety net and a competitive boost. You've experienced new leadership with a clear turnaround focus. And they still have a strong balance sheet, giving them flexibility despite the cash burn. But these are heavily counterbalanced by that history of execution failures, by the intensely fierce competition, by the deeply unclear profitability timeline for the foundry, by ongoing market share losses, and by those incredibly high capital requirements with really uncertain returns. So it makes Intel a textbook, high-risk, high-reward investment. Much more suitable, I'd say, for long-term investors. We're talking 3+ years here, not short-term traders.
And price-wise, any thoughts on entry points?
For those considering an entry, based on the risk-reward, the analysis suggests an optimal range might be around $18 to $20.50. So at its current $22.20, it's kind of approaching what seems like fair value for its current risk profile. A more aggressive entry, maybe below the 52-week low of $17.67, that would offer a greater margin of safety.
And risk management, stop losses.
Definitely. If you were to consider it, a disciplined stop loss around $17 seems sensible to limit potential downside. For profit targets, maybe conservative aims around $28 to $30. More aggressive targets, if the foundry strategy really pays off, could be $35 to $40. But given the very high execution risk, the sector volatility, a portfolio allocation of probably no more than 5% seems prudent. Don't bet the farm on this turnaround.
Right. Okay, so there you have it. The complex, volatile, potentially rewarding, potentially disastrous story of Intel Corporation. It seems pretty clear that while the valuation might look tempting and that government support is a significant factor, the company's history, the execution challenges, the competition, they all warrant a really cautious approach. Risk management is key here. Ultimately, that question, is it a good time to buy now for Intel? It seems to depend entirely on your time horizon, right? And your appetite for a major turnaround story that has some serious hurdles still ahead. It really boils down to whether you, the investor, believe that this time Intel can actually deliver on its ambitious vision and recapture some of that former glory. Thank you so much for joining us for this deep dive into Intel. We hope you feel much better informed, maybe have a few new questions to explore on your own. Don't forget to subscribe, like, and share your thoughts in the comments. We do read them. And we'll be back soon with another deep dive into your most pressing questions.